And once the market recognizes that the U.S. is more or less bluffing, or they've done a raise or two and they can't go any further, that in the past has shown to be the bottom in gold. And from there, there's been pretty massive rallies.
This week's special with Miles Franklin Precious Metal Investments. 2022 Silver Krugerrands for only $409 over spot. To order, call us at 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan, the Silver Guru. David, thank you so much for joining us today.
Well, Elijah, thanks for having me, and Happy New Year. This is the New Year's Eve day and last day of the year.
As we look back at 2021, can you share with our viewers kind of your insight into what happened in the metals markets and what we might be should be expecting in 2022?
Sure. I use one word, disappointment, for what happened in the metals market. That's an emotional response. So I think first we have to contrast, what happened in the dollar and what happened primarily in the stock market. Gold is the anti-dollar investment. That's how most people think of it. There's a lot of merit to that statement, but primarily gold moves against the stock market. The stock market just kept making new highs. So you would think that gold would be making not necessarily new lows, but not do as well. And that's part of the equation. The other part was what happened in the silver market with the beginning of the year with the Wall Street bets and some conversion factor of people that moved to Wall Street silver. And that effort grew substantially, especially in the early part of the year. And we saw a lot of pressure on the silver market in the early first quarter of 2021. In fact, we got to, I think, 30. My prediction at the beginning of the year was looking for a $30 silver print. I thought it'd hit that. And we might have hit it in the overseas market. I'm not sure, but we got fairly close. And then we saw two of the main ETFs come out and change their perspectives, the SLV and SILVR, I think it was. Anyway, the main one, SLV, and the other substantial ETFs both changed. In fact, in one of them, they stated that they were concerned about the physical silver supply being able to be maintained at a level that was commensurate with what the ETF was supposed to hold. My words, that's kind of a paraphrase. And then a little bit later, the CFTC commissioner said they needed to tamp down the silver market. I mean, you never hear them talk about tamping down the soybean oil market or tamping down the cattle market or tamping down the corn market. So these things are very frustrating to silver investors, speculators. But nonetheless, that was what the first quarter looked like, and that was about the best. And through the rest of the year, we started seeing, the price fall off, and even mid-year or so, even mid-year, the summer doldrums took place, which is very expected by most of us that have been in the market for a while. So that didn't really concern me. I did think after the summer we would start to see a push up, and I was still optimistic that we might even get back up into the $30 range. And of course, I couldn't have been more wrong. I mean, a lot of analysts, such as myself, thought the same way. There were a lot of technicals that looked good. The COT looked favorable. There were, room to the upside. We saw the largest silver purchases physically in 2020. It seemed we were getting the same demand for investment in 2021. So there are fundamental and technical factors to be optimistic after the summer doldrums, but it failed. So I'm not trying to make excuses. I have a couple critics on Twitter, and I've got more other places that, no one's owning this. I'll own it. It's frustrating also knowing that we've expanded the money supply at such an unbelievable rate, and yet gold itself and silver both have not really responded to this massive influx of what I call funny money into the system. And of course, this flows, a lot of it goes into the debt markets, the credit markets with the US bonds. A lot of it flows into the stock market, and a lot of it's static. It's held, it's sterilized. It just sits on the bank's balance sheets and doesn't do anything. So it's almost as if it hasn't been printed, because it just sits there basically doing nothing other than, lying on the ground dead. That's a metaphor, of course. So for 2022, I do think we will see better markets, but with the Fed taking a stronger stance and talking about tapering and raising interest rates, that will be a negative for gold and silver going forward for a while. But at the same time, China is lowering their interest rates. And this has happened a couple times in the past. And what this means is, since China and the US are the largest economies in the world, with China cutting rates at the same time the US is raising rates, that can't go on very long. And once the market recognizes that the US is more or less bluffing, or they've done a raise or two and they can't go any further, that in the past has shown to be the bottom in gold. And from there, there's been pretty massive rallies, 2016 being a prime example. In fact, in 2016, we had such a huge rally from January through September, which passed the summer doldrums, which is very rare. I was convinced at that time that the new bull market was intact. I was looking back, obviously I was incorrect, but it certainly was a moneymaker for us at the Morgan Report. We had AG, First Majestic, on in January at a very low level. I think we made about 600% on that one stock, because we had such a good rally in the silver and gold markets. So what I'm saying is, I think we have to be a little more patient. I think 2022 is not going to be that good for gold initially. But I think going in, as I just outlined, there'll be that bottom that we've seen two times before, and then we'll start to get a rally, and I think we will rally into the end of the year. So next year at this time, I think we'll be pretty happy about what gold and silver's performance has been. And last but not least, I haven't said it in a while, the black swans flying around. I think you should always have a position, maybe not overweight. You might want to overweight slightly when we hit the bottom, if my thesis is correct. And otherwise, just maintain what you have. Don't stress. I mean, it's God's money. It's a sure thing. It's certainly not a speculative investment like a cryptocurrency. And if you're weighted correctly and you have the right amount, you really can sleep at night. You don't have to stress. It's people that overinvest or have expectations that are, let's say, not realistic with what the money powers are able to achieve at this time.
Now, looking back at 2021, I think the silver squeeze was it may have been the biggest event in the silver market since the 1980s. And we did see a huge rally, up to almost $30. I recently interviewed Robert Keynes of Gold Silver Pros, and he said that essentially, given the silver supply right now, the silver market can't really handle another squeeze without having the price go significantly higher. Your perspective on that?
That's a tough one. First of all, shout out to Robert. He's a great guy and has very good insights. I've seen, I've watched this for years, probably longer than anybody. Maybe Ted Butler and I are, the longest hawks. Hawk meaning looking with beady eyes at the CO2 reports and the inventories. But I've seen the registered category down as low as 35 million ounces before we got a significant rally. And right now we're at 100 million. But Robert's correct from the aspect of the flow rate. So it doesn't matter too much of what the inventory amount is. It depends on how much is being, siphoned off. It's like flow through a pipe. If you've got a garden hose and it's trickling out, and that's how much silver demand there is, or if you've got a fire hose and it's gushing out and it can hardly hold the pressure, you've got a different dynamic. So by putting words in Robert's mouth, but if you're in that fire hose situation, then yeah, we haven't got much to go. And that would be true for 2020. That's what happened. In 2021, it remains to be determined what the final numbers are, but halfway through the year, it looked as if we were in the fire hose situation. If we were, then the price really makes no sense. And if that is to occur or is occurring, then I'll agree with them that, we have a situation that cannot be held back for very long. it all comes down to supply and demand, and supply being verified. One thing I haven't brought up too much, although I've done it on my personal podcast I call the Weekly Perspective. And Morgan Stanley got caught for selling silver that they didn't even sell and storing it, and it wasn't a storage facility. They didn't get in that big of trouble. I mean, for me, personally, I think anyone that cheated that much and lied should be banned from ever trading in the silver market again for the rest of the firm's tenure. That's not what happened. They paid a fine, but when they also made the excuse that it was ordinary and customary in the storage market to do that. In other words, they were justifying that, taking people's money to buy silver and not really buying silver and not even storing it was pretty much, I'll say, standard practice. And that is, it's in print, it's in Coin Week. Is it true or false? I don't know. I have it in print. I can show you the source. It's one source. It doesn't prove it exactly. But what I am saying is, from my vast experience, there have been numerous times where people have bought silver, and it happens in gold as well, but primarily in silver, paid for it, paid storage, and really it's not commensurate with A equals A, which means there's a lot of people doing the same thing, but they're running a fractional reserve system. So yeah, there's silver there, and yeah, it's in a vault, but it's only, let's say, 50% of the fiat that was put into the system to back it up. And why? Because they can get away with it. Because most people that buy and hold it trust their broker, their account, their vault, whoever it is. And I'm not calling out any of the big names. I think you're safe with, Brinks or Garda or Loomis or, any of the CFTC warehouses. I think you're safe in all of those. I'm talking about, let's say, some of these other ones. And even a mainstream brokerage house, it's proven that Morgan Stanley lied. So you got to be a little careful. So my point is that if every ounce of silver that was bought, paid for, and stored was actually there, I think you'd have a much tighter silver supply than you have. There's so many ways for these banks to hold it in their vaults, but for the counterparties to be able to leverage that, use it as collateral, and produce, let's say, a derivative product that really obfuscates the true dynamics of the physical silver market, and gold and platinum, palladium for that matter, but primarily the silver market.
And I know with respect to a lot of the, I guess you could say, manipulation or controls in the silver market, there has been proven manipulation, obviously, or, banks have settled for manipulation cases. But your perspective then on, is Basel III going to have any impact on this? Because I know at the beginning of the year, some of the regulations are going to be implemented. So some people are hoping that this will kind of clear up the market. But what is your perspective on that?
It'll have almost zero effect. I've been through this before. I reread it. It's misunderstood. It's pretty easy to look. Investopedia does a pretty good blurb on what Basel III really means. What it will do is it will deleverage the market somewhat. It will take a lot of some of the trading desks on, brokerage firms will just cancel their gold trading desk altogether. The volume will go back to probably the futures exchanges, and the risk will be mitigated from the banks. So the banks will put that risk on the individual trader or the futures exchange, or maybe someone else in the over-the-counter market. So I don't think it's going to have much effect at all. It will consolidate. It will take some banks out, and it does, clean it up somewhat, but it's not going to be what you're hearing on the internet from a lot of other people.
Now, as for the physical market, I know we're continuing to see very strong demand. Typically November and December are pretty slow months for retail demand for physical precious metals, but it has remained pretty strong these months on our side at Miles Franklin. So there continues to be high premiums, right? So, those are actually increasing again now. So your perspective on the physical versus the paper market?
Sure. Well, first of all, my comment is you're not old enough. And the reason I say that is there used to be a pretty good seasonality that you've got a very nice run in the precious metals from December, somewhere in December, sometimes early December, sometimes mid-December, up through January at least. And over the last few years, the last decade or so, you've seen the worst print in silver and gold on probably 5 of those 10 years on the last trading day of the year. It's not happening. It's actually more like it used to back when I was your age, where it starts to rally sometime in December and that carries through to January at least. In fact, I used to trade platinum, palladium almost every January. It was almost a sure thing. Of course, the markets are so crazy these days, it's hard to get a seasonality that works all the time. I mean, the summer is usually bad for the metals, as I said, a couple of times. So, no, my take is that the demand is still stronger than the price indicates. That's verified by a couple of things. We're seeing this, good price action here at the end of December. We're seeing the premiums remain high for retail. We're seeing the wholesale markets continue to increase their price for 1,000-ounce bars, which is almost a sure indicator that the market's tight and there's not as much free silver out there as the price would indicate. And lastly, what we've seen is in the last week or so, we've seen about not quite 10 million ounces of silver go from the register category, which is the dealer's inventory, to eligible. And that usually indicates fabrication demand. So this could be for, let's say, the mintage of, next year's Silver Eagle, for example. It's not a guarantee. It's conjecture. It's a very well thought out conjecture. So again, going back to Robert Keynes, if that demand is coming out of fire hose and the flow rate is really significant, another silver squeeze would, potentially start to concern the, let's say, officialdom that we saw again in early part of the year 2021, where the perspectives were changing and all that. This may sound like an excuse, and you say, well, David, I don't even think you should say what you're going to say, but the whole thing just doesn't seem to make sense. I mean, when you look at what the paper markets have done with the money supply and all that, which I've already mentioned, every fundamental fact for gold and silver to do better is out there, but yet they're not. And so that begs the question, why not? And I've given my best ideas of why not, but until the money powers really start to fail as far as how much supply they can put in the market to quell the demand. And that's one thing I've talked about in the past, and I think bears repeating, is that until all that physical demand is balanced, again, going back to how much is really in these storage facilities versus how much has been paid for, until you are really able to rectify that situation. And I know I'm making a conjecture here, but I also have some proof of it. And then, we can see these games go on. I mean, basically, the whole system is based on a fractional reserve system, and the silver and gold markets are derivative markets. So because you have a derivative that sets the price, and you have a fractional reserve system in the physical reality, it's really hard to get a handle on how much has really been bought and how much has really been stored. And that may never be known unless you really took an accounting that's valid accounting throughout the entire sector. And the way the system is set up, I don't think you ever see that. That might be a question for Robert the next time you interview him, is how much of this, accounting and auditing is really valid. I know he's done some podcast with, I forget the gentleman's name, I hate to forget it, but the gentleman in the UK. And a lot of these audits are far from a true audit. They're just basically a paper chase saying, they got the gold. Yeah, we're paid to tell that. We're paid to say they've got the gold.
All right. And to wrap up, David, I guess if you can reiterate your outlook for 2022, what I'm hearing is you're looking for a first kind of slow start to the year, possibly a fall in precious metals, and then going to the end of the year, a rally. What kind of price action should we expect?
I think you outlined it perfectly. I mean, I don't think we're going to see a big washout in gold or silver. Silver, I'm hoping the 2150 level we've already seen it bounced off pretty strongly and pretty good buying down there will hold. But it might, pierce that. And we could even see, something in the 19 level, which is super strong support. If it got to that level, I doubt it'd stay there very long. It'd be a heck of a buying opportunity. I'd put out an alert for the Morgan Report, premium service. And gold, 1,700 probably is about as bad as it'll get. I'd just be cautious. I'd say if you don't have any now, buy it. And I would think anyone new in the sector or wants to, go along with the idea, just, dollar cost average or buy in over the next, I would say 6 months. I don't think this tightening scare that the Fed has announced will actually hold water for very long. I'd be surprised if it went any further than 6 months.
All right. Well, David, we really appreciate your time today on this New Year's Eve. And I guess before we let you go, where can our viewers find you if they're interested in learning more?
Yeah, the main website's themorganreport.com. Get on our free service and make sure that, there's more than the landing page. I just announced there's a lot of tabs and a lot of information for free. You can go to the blog and see all the work that I do for free for the public domain. You can also go to the About Us and watch the movie The Four Horsemen, which is a good overview of the system at large on a global basis. And it kind of puts things into perspective because we go through this cycle again and again. Then there's the book, The Silver Manifesto and Second Chance, certainly, in my view, worth the money. So there's a lot of information that's available at the website for free. You can also subscribe to my Twitter feed or our YouTube channel, and that way you'll get alerted when, something pops up that might demand your attention. So thank you, as always, Elisha. It's always fun to be with you. Wish I had better news for everyone, but I think I try to maintain an objective and realistic view on the markets and, take heed to what I've said about, how much is really there and how much is purportedly there. They don't match.
All right, David, once again, thank you so much for your time and God bless.
God bless you.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.